What a start to the year in the stock market, with the S&P 500 hitting new all-time highs, up by over 4.5% year to date. However, things in the UK are looking much worse. Inflation seems to be too sticky, with the Bank of England saying that they're not going to be cutting interest rates anytime soon. And as a result, the FTSE 100 is down year to date by over 1.3%, and the FTSE 250 is down year to date over 1.5%. So how has all this news affected my Trading 212 portfolio? In this video, I'm going to be revealing all. So here is my Trading 212 portfolio, and as you can see, the current size of my Trading 212 Invest account is £25,379.58. If we go down to the drop down menu here, we can see that currently I have £0 in funds, and actually yesterday I had a lot. I personally have been taking advantage of Trading 212's new feature where they put uninvested cash into money market funds. As you can see, over the past few days, I've been receiving around £3.20 on the uninvested cash I've had. Per day, this feels really good, and as a yearly rate, that's around 5%. However, as the famous saying goes, time in the market is better than, trying to time the market with having cash, and therefore most of the time I like to have all my cash invested and working for me. You can see that my return Trading 212 calculated anyway is a positive £103. So Trading 212 is notoriously known for having this really weird return figure, and I wouldn't go about relying on this figure because it doesn't really tell you much at all. Compared to my last month's portfolio, I'm up over £1,000 in my Trading 212 Invest account, and that is despite the fact that I actually didn't have any cash to put into my investment accounts. And all the appreciation is down to two factors. One is my free shares, so thank you for that. The second is actually the fact that I have been trading between some of the ETFs that I mentioned in the beginning. So these are namely the S&P 500 and the FTSE 250. And because of this, I've actually made quite a lot of profit, and this has just luckily added to the size of my portfolio. As you can see from the history of my trades, my total realized profit is a plus £1,274, which I am actually very happy about. In terms of dividends, I've received £180 in total for my Trading 212 Invest account. And then again, I'm not very focused on dividend investing. I am very much more focused on capital growth and increasing the size of my portfolio, because in the future, if I did want to rely on dividends, I could just, buy the dividend paying stocks with a larger amount of capital. So in any case, if I go back to orders, you can see I have actually been buying and selling the FTSE 250, which as we know by now is very volatile, and at my own risk, I've been going in and out of this volatility. Of course, definitely not financial advice, definitely don't copy what I'm doing, but it has over the past few years really served me well to do this. In terms of free shares, I've received 101 free shares, totaling £1,628. I'm incredibly grateful for everyone that signs up using my link. Of course, every month I'm going to be showing you this so that you can actually mentally take away how much I have with my own funds and what I get for free shares. If you do want to sign up to Trading 212, use my link in the description down below and we will both get a free share. Thank you very much. Over the past month, you can see this graph. Because I do a few buy and sells, it doesn't really tell you much, so I'm not going to bother with this. I'm going to go through every holding and show you how my portfolio is doing and the strategies that I use to ensure that my capital is always growing. So first up, I have Walt Disney. I only have 0.12 shares in that. So over the past month, Disney has been doing really well, actually, up by nearly 6%. Steady incline here, looks very good to me. I've noticed that Trading 212 has added quite a few features here and there, and I haven't seen this before, but they have added what seems to be like a little bulletin board or something like that, where you can find out more about Disney. Very nice to see. So my investment overall is up by 6.39%, but that is only a gain of 59p because I haven't invested much into Disney. Here we see key ratios, and I think they've updated a few figures here, but Disney does pay a dividend yield now of 0.31%. You can see the revenue has been increasing yearly. 2023 was even better, but their net income seems to have been impacted a little bit. Of course, looking at these financials isn't everything that you need as an investor, but it's good at a glance to see these figures. From a balance sheet perspective, you can see from 2021 to 2023, things are looking very similar. A high number of assets compared to the amount of liabilities that Walt Disney has. And from a cash flow perspective, we can see that operating income has increased quite significantly, and the cost of financing has decreased, and the cost of investing seems roughly similar. So next I have 35.1 shares in Vodafone. Over the past month, they have been doing not the best, as you can see, down by 1.31%. Again, some news bulletin points here that you can actually scroll through. Very nice to see this, and it makes the whole app feel more interactive and more updated. Overall in my position, however, I am down by a massive 24.97%, and that is a loss of £7.99. Vodafone do pay an extremely high dividend yield of 11.46%. And if we look into their financials, we can see that revenue has been similar since 2021. Net income has significantly increased from 2022 to last year's 2023. And from a balance sheet perspective, we can see it looks very similar. But remember, companies, especially telecommunications companies, they can put whatever they want as assets. So it is worth looking more into their financials. And speaking of more into financials, I think this is a new feature, but now you can look more into the financials here. And here we are, we can actually see the entire balance sheet. 2021, 2022 and 2023. Here, if you are inclined, you can see the total current assets and what they actually label them as. We have cash and short-term investments here at 18.72 billion, cash at 2 billion, cash and equivalents at 7.78%. And this segment, I would say, is what exactly is a cash equivalent. Companies such as Vodafone might put vouchers as cash equivalents. However, vouchers in real terms don't actually have any monetary value outside of, the environment that Vodafone has created. So again, if you want to look deep into the balance sheets, I'm very happy to say that this is now available on the Trading 212 app itself. You can even look at their income statement here and their cash flow in more detail. So it's amazing to see this. So graphically speaking, here is the cash flow for the past 3 years. We can see that their cost in investing has reduced quite significantly. Cost of financing has increased. So next I have 0.9 shares in the Vanguard Germany All Cap. Over the past month, up by a paltry 0.9%. Overall, I am down by 1.55%, but that is only a loss of 32 pence. Recently, I've made a video on how Trading 212 has now incorporated key ETF information for iShares funds. Unfortunately for the Vanguard funds, they haven't actually done that yet. But if you see some of the BlackRock iShares funds, they now have the dividend yield and every important ETF information at a glance, which I really want to see for Vanguard funds too. So next is my biggest holding by far, and that is in the Vanguard FTSE 250. Over the past month, down by 0.49%. However, that hasn't stopped me from investing because, of course, you can see the intense fluctuations that I have been very much enjoying. I only opened this position yesterday and I'm only down by 0.01%, which is minus £2.44. I bought this at an average of £29.63. Now, I do think when the markets open, at some point within the next month, we will see an increase. If not, then it is better time for me to buy more Vanguard FTSE 250 shares somewhere else, because I do strongly believe that when the Bank of England actually reduces rates, the FTSE 250 and the FTSE 100 are going to see a sharp incline. Again, not financial advice. So I have 813 shares worth £24,101, so a significant amount that was actually in cash yesterday, and I was making around £3 in interest if I left that into the Trading 212 qualifying money market funds. So next I have 0.17 shares in Tesla, and over the past month, oopsie-doo, Tesla is down by over 21%. I didn't even notice this because I don't actually look at individual stocks that much. But wow, maybe we have some information as to why Tesla has gone down so much here. Oh, there's a recall here, something to do with Elon Musk. See, companies like this are very speculative and they all kind of rely on the fame of Elon Musk. Therefore, please do your own research and diversify, and please, I implore you, don't go all in on Tesla or anything like that. Overall, in my portfolio, Tesla is down by 12.18%. That is a loss of only £3.53 because I'm very well diversified. Tesla does not currently pay a dividend yield, and from the financials we can see the revenue has been skyrocketing and the net income seems to be increasing too. Balance sheets looks just the same, total number of assets increasing year on year, whilst the liabilities aren't increasing in the same proportion. From a cash flow perspective, we can see in 2023, Tesla made less through operating, and the cost of investing has increased quite significantly. Next, I have 0.12 shares in Starbucks. Over the past month, Starbucks had a massive peak, and then month to date, it is down only by 0.26%, so it's not doing that bad. Overall, I am up by 0.75%, and that is a gain of only 7 pence. They do pay a dividend yield of 2.45%, and as you can see from the income statement, revenue has increased quite significantly. From a balance sheet perspective, you can see the number of liabilities seem to be higher than the number of assets. Now, if you want to go into their liabilities and know what they are, you can actually go here. So total current liabilities are accounts payable, they're the accrued expenses that they have, and then most of these other things are just debt. So quite a lot of debt Starbucks has fallen under. From a cash flow perspective, they're doing better in operating in 2023 than they did did in 2022. And the cost of financing seems to also be less. So next I have 33.5 shares in Rolls-Royce. Over the past month, Rolls-Royce has been doing pretty decently, up by 5.22%. In my portfolio, up by a massive 111%. That is a gain of a nice £54.46. You can see one news item here, and there seems to be comments here linked to the community posts where you can of course get the latest news and interact with that. But of course remember that community posts themselves are not financial advice. Nothing is financial advice. They don't currently pay a dividend yield, and we can see there is no 2023 data here. So next I have 2.1 shares in PayPal, and over the past month they are up by 6.46%, so very nice to see that. You can see on the 22nd of January they had a nice big peak. Plenty of news events here that takes you straight to the news sources, and like I said, these are linked with the community post features, although the sources are listed here. So this is MT Newswires, not heard of them before. So overall in my portfolio I am up by 1.17%, and that is a gain of £1.22. They don't currently pay a dividend yield, and we can see that the 2023 data is not here, unfortunately. So next we have 2.32 shares in Orange. Over the past month again they peaked around the 23rd of January and then a slight decline, but they are up overall by 3.18%. Again, verified posts by Orange here that you can quickly scroll through and find out more about what's been happening that might be impacting the share price. Overall in my portfolio I am down by 2.51%, and that is a loss of 56p. They pay a nice dividend yield of 6.4%, and unfortunately no 2023 figures, so there's not too much up-to-date information here. So next I have 0.09 shares in Nvidia, and over the past month they are up by a humongous 39.08%. As part of the Magnificent Seven, they have been absolutely tearing it and driving up the value of the entire S&P 500. Just when you thought that Nvidia wouldn't go up any further, it is climbing with a share price of $662. You can see that back in October 2022, Nvidia was valued at less than $120. So you could imagine if you had invested there, you would have 6x to your money, which is absolutely wild to me. But of course, hindsight is 2020, and are you really willing to deal with the risk of losing half your money with no guarantee that you would have gotten 6x your return? I don't think so. But anyway, here are some Nvidia news items, and overall in my portfolio I am still up by a nice 122%, so that is a gain of £26.22. You can see they paid the smallest dividend yield I've ever seen at 0.03%, and you can see also the revenue has not been increasing since 2022, although it is still extremely high. From a balance sheet perspective, you can see it looks like some assets have been sold over 2022 to 2023, and from a cash flow perspective you can see that actually the cost of financing has increased significantly. That being said, Nvidia is very highly valued because of its future expected performance, and that's how the stock market works anyway. If a company is expected to be making profits into the future, then the share price will go up regardless of if the company is really worth anything at all. It's what the shareholders are willing to pay for it. So next I have 0.4 shares in Nike, and over the past month a decline of 3.2%. In my portfolio overall they are down by 2.09%, so that is a 69p loss. Nice but bad. They pay a dividend yield currently of 1.45%. And you can see from the income statement the revenue has been increasing, net income seems to be decreasing, and from a balance sheet perspective we can see that their total number of assets seems to be decreasing, but so is their liabilities in the same proportion. Cash flow perspective, we can see operating income is up from 2022. However, the burden of financing has increased quite a bit too. So next I have 0.49 shares in National Grid. Over the past month, down by 2.07%. In my portfolio overall, they're up by 3.83%. That is a gain of 19p. Dividend yield very nice at 5.42%. And you can see from this income statement, the revenue has been going up quite significantly and net income has shot up. Balance sheets again looking pretty good. Number of assets are higher than liabilities. But again, if you really want to find out what they are talking about when they say assets, you can find out a bit more from more financials here. From a cash flow perspective, you can see that, operating income has increased, but the cost of financing is increasingly becoming a burden. So next I have another Magnificent Seven stock, but only 0.07 shares in that. over the past month up by a nice 10.96%. Of course, being a tech company and exposed to AI, companies like Nvidia and Microsoft are benefiting from the whole AI boom, which could be a bubble, but at the moment, investors are emptying their wallets into these stocks, so that's where all the valuations are going anyway. Overall, my return is a positive 9.82%, and that is a gain of £2.14. Microsoft do pay a dividend yield, but very small at 0.74%. And from a financial perspective, we can see from their income statement, revenue has increased nicely, so has net income, and balance sheets look very good, but we already know companies like Microsoft have extremely good balance sheets. From a cash flow perspective, we can see they're investing a bit more and cost of financing a bit more, but you know, Microsoft is most likely going to be fine. So next I have 0.38 shares in Mercedes-Benz, and over the past month, they are up by 3.44%, looking very nice. In my portfolio overall, however, they are up by 2.89%. That is a gain of 60 pence only. They pay a really good dividend yield of 8.08%, and unfortunately there are no 2023 figures here. So next I have 343 shares in Lloyds Banking Group. Over the past month, down by a massive 10.83%. And if we go into the latest news item here, it says that Lloyds Banking Group is closing down some sort of mobile branches because of lack of customer use, which is not looking good for the company. That could be one of the reasons why the stock is down, as investors are losing confidence in this banking company. But of course, because interest rates are very high, this puts a lot of pressure on UK banking groups anyway. In my portfolio overall, however, I am down by 4.64%, and that is a loss of £7.08. They do pay a really good dividend yield of 5.95%, however, and unfortunately the 2023 results are not here in terms of their financial statements, and you could find these financial statements anywhere on Google, for example, Google or even Yahoo Finance, so it's not something that's very hard to find. These are all publicly available documents. So next I have 6.2 shares in Royal Mail. Over the past month, surprisingly up by 3.25%. In my portfolio overall, however, they are up by, again surprisingly, 30%, and that is a return of £3.99. They don't pay a dividend yield anymore, I believe they used to. From a financial perspective, we can see that revenue has decreased and net income is also in the negative. From a balance sheet perspective, we can see a mass selling off of what it seems like selling off assets. And from a cash flow perspective, we can see operating income is down significantly. So in terms of a financial perspective, Royal Mail's not looking good at all. However, they have been making quite a few changes, a lot of cutbacks. Maybe investors think that there's a lot more value to be given from Royal Mail in the future. So next I have 23 shares in IAG. Over the past month, down by 2.33%. From the news section here, we can see that Morgan Stanley has downgraded IAG, and this has no doubt impacted the share price for IAG. In my portfolio overall, they are down by 2.62%, and that is a loss of 92 pence. No dividend yield currently, and again 2023 financials are not available here on Trading 212. So next I have 3.16 shares in H&M. Over the past month, down by an incredible 19.45%. No news bits here, unfortunately, for some reason. They do pay a dividend yield of 4.52%, and from a financial perspective, we can see net income has increased a little bit, so has revenue. From a balance sheet perspective, we can see quite a lot of liabilities, but then more assets. And from a cash flow perspective, we can see that isn't looking worse than 2022. However, operating does seem to be a lot less than the golden age of around the 2020s. Next I have 0.29 shares in GlaxoSmithKline, and they are up by 5.97%, which is really good to see. Overall in my portfolio, they are up by 21.16%, and that is a return of 84 pence. They do pay a dividend yield of 3.66%, and as you can see from the financials, net income has gone down quite significantly. Balance sheet perspective, total number of assets seems to be a lot less than back in 2021, and from a cash flow perspective, operating income has decreased and the cost of financing has increased quite significantly. So next I have 2.01 shares in Direct Line Insurance. Over the past month, down by a massive 10.2%. In my portfolio overall, they are down by 18%. That is a loss of 72 pence. No financials for the last year, unfortunately. So next I have 18.13 shares in Deutsche Lufthansa. Over the past month, up by 3.57%. In my portfolio overall, however, down by 8.95%. That is a loss of £11.97. No dividend yield currently, and no information also for 2023. So next I have 1.5 shares in Delivery Hero. Over the past month, down by a whopping 31%, which is one of the biggest drops I've seen on this account. From the news, we can see there have been talks for it to potentially be selling its Food Panda business. And overall in my portfolio, that is a loss of 45.12%. No dividend yield currently, and again, no results for 2023. Next, I have exactly one share in Carnival. Over the past month, quite steady, down only by 0.21%. In my portfolio, up by 68.57%. That is a gain of £4.80. Of course, due to the recent geopolitical tension between so many countries that I'm not going to mention in this channel. Of course, some of the sea routes have been affected, and this of course increases the cost of shipping for companies like this, and that could affect the share price. They do pay a dividend yield of 3.36%. 2023 was an increase in revenue quite significantly, although net income is either not shown here or it was around zero. From a balance sheet perspective, we can see the total number of liabilities are creeping up, and from a cash flow perspective, we can see they're not making a profit in terms of operating. So next I have 21 shares in BP. Over the past month, down by 2.81%. They have a new CFO, Kate Thompson, and overall in my portfolio they are down by 12.86%, and that is a loss of 14.23%. They do pay a nice dividend yield of 4.83% and no results for 2023, unfortunately. So next I have 0.3 shares in BMW. Over the past month, down by 1.54%. In my portfolio, however, down by 3.51%. That is a loss of only £1.14. They pay a very nice dividend yield of 8.76%. Again, no results for 2023 in terms of its financial findings. So next I have 1.3 shares in Aston Martin. Over the past month, down by a massive 9.31%. In my portfolio overall, however, up by 31.16%, and that is a gain of only 62 pence. No dividend yield currently, and again, no results for 2023. So next I have 0.02 shares in ASML, and over the past month, up by a massive 26.87%. In my portfolio overall, they are up by 21.35%, and that is a gain of £2.59. They do pay a dividend yield of 0.74%, and again, no financials for 2023. Next I have 0.42 shares in Apple, another Magnificent 7 company. Over the past month, only up by 0.87%, peaking on the 24th of January. In my portfolio overall, they're up by 3.51% still. That is a gain of £2.12 only. They pay a very small dividend yield of 0.52%, and as you can see from the income statement, revenue is incredibly high, and from the balance sheets you can see liabilities and assets are also very high. You can also see from the balance sheets that they keep a lot in cash, so they actually have 28 billion in just cash, and that is a lot of cash to have, and that will serve them very well for the future. You can also see what kind of debt and liabilities they have here, but they're doing very well in terms of a balance sheet perspective. From a cash flow perspective, we can see again operating income is very high and seems to be okay with the cost of financing. Next I have 1.2 shares in Amazon. Over the past month, up by a massive 15.72%. In my portfolio overall, they're up by 61.49%, and that is a gain of 64.27%. No dividend yield currently, but you can see from the revenue, incredibly high, over 575 billion in, and of course net income is in the billions too. From a balance sheet perspective, we can see lots of assets. Going into that, you can see there's a lot of assets in terms of properties and plants and commercial units, and they also have some other long-term assets, but again, if you want to see everything, you can see it in the breakdown in the actual balance sheets. From a cash flow perspective, you can see operating income has increased very much. So next I have 0.47 shares in Alphabet. Over the past month, up by 2.49%, and again peaking at the end of January. In my portfolio overall, up by 12.94%, and that is a gain of £6.09. And I currently have a pending order for a free share for £25 worth, so thank you very much to whoever signed up for that. No dividend yield currently, and from a financial perspective, revenue has increased very significantly, so has net income. From a balance sheet perspective, we can see total number of assets increasing in line every year, and liabilities not going up that much. Cash flow, we can see lots of operating income that should take care of all the financing and investing needs. And lastly, in my Trading 212 Invest account, I have only 0.03 shares in AMD. I actually only put £2 in AMD a while ago just to see if £2 would make any difference, and you can see over the past month it is up by 31%, and in my portfolio overall it has more than doubled, up by 125%. That is a gain of £2.50. So yeah, even if you want to invest £1 or £2, sometimes it can actually pay off, although you're not going to become a millionaire from just investing a couple of squids here and there. No dividend yield currently, and we can see from the revenue, incredibly high. From a balance sheet perspective, we can see total number of assets greatly exceed the amount of liabilities. And from a cash flow perspective, we can see that operating has taken a big hit, and the cost of investing and financing has also increased. So next I have my Trading 212 ISA account. As you can see, there's nothing here because if you go into here, I have all my free funds in cash. So that's £22,460 and 31 pence in cash. Like I said before, it's not the best thing as an investor to keep cash. I actually completely forgot that I had this because I otherwise would probably have put into something like the FTSE 250. But anyway, if I wake up next week and the FTSE 250 has decreased, you can bet your bottom dollar that I'm going to be putting my top dollar into the FTSE 250 or something like that. But in any case, right now, I don't feel the worst I've ever felt in my life for not investing this money. This is because Trading 212 currently gives 5% on any uninvested cash. So even if you are a beginner and you want to, start investing and you're worried about investing and you want to do a bit more research, you can open a Trading 212 account. Just put money in it and you're going to get higher than most banks are giving anyway. Unless you really shop around and find an instant access savings account that's giving over 5%, you would be hard pressed to find something giving you this much interest. But remember, this money is invested into money market funds, so there's a bit more risk than just a bank account, but overall very safe. And I'm getting around £3 interest per day, which is of course very nice, but I would rather personally be putting it into the stock market and making my wealth grow. More than 5% would be nice. So in any case, the reason why I have this much cash is because I actually recently sold out. I actually just sold out yesterday. And you can see that my total realized profit is £1,808.33. ISA calculations are the easiest because every year I max out my ISA with £20,000. As you can see, ISA utilization is 100%. So this means my gain on my ISA this year has been £2,460. And for you mathematicians out there, that is more than a 10% gain, which I'm extremely happy about. And I target 10% every year, regardless of where the market is going, if the market is going up or down. This is because I tend to go all in on an ETF, ride it out, and then sell out at a position where I'm guaranteed to make money at the risk of potentially losing out on making more money. But even when the markets were down, I was making 10% every year. I don't want to act like some sort of stock picker or something like that because I do think there's a lot of risk in what I do and I don't recommend it for anyone. I personally find it incredibly motivating to do that and it has worked out for me, so why not? At the end of the day, I'm putting money into an ETF and I would have held on to this ETF regardless. So the way I see it is if the price goes down on the ETF that I buy, that just gives me more reason to keep putting more money into that ETF until it goes back up. So make sure to check out some of my other videos and I'll see you in the next video.